Hi Pratim, once again we
Hi.
have got you in another round of discussion. Uh, so today our topic is going to be ferrous metal sector. Ferrous metal.
Okay.
So mainly steel, like we are going to cover steel. So so this is the second time I got the opportunity to speak to you, and like many thanks for taking out time from your busy schedule. So my
Thank you.
first question to you, Pratim, uh, we know that government banned iron ore export in May 2022 to keep Indian steel manufacturing means to keep the steel manufacturers of India in a healthy condition, right? But as government lifted the ban in 6 months, export from India has jumped. Is there any supply constraint for the Indian steel mills in terms of iron ore availability?
See, I firstly want to say one thing.
Hmm.
The steel raw materials are the main two things. One is iron ore, another one is coking coal.
Cooking
Coking
coal.
coal is fully exported materials. Only Tata Steel have one mine in Jharia, 1 million.
Okay.
So rest is export.
Okay.
So rest is imported. Sorry. So
Hmm. Hmm.
iron ore, Tata Steel have the full captive one.
Okay.
Sale
Hmm.
full captive one.
Acha.
JSPL 40 to 50% captive.
Okay.
JSW 50-60% captive.
Okay.
These are the major four players in India.
Okay.
So and a Assan Mittal is also there. They have also captive of 60%.
Okay.
So this export ban doesn't make any drastical impact in the steel company, primary steel player.
Okay.
This got some impact to the secondary steel players. Those are the small mills. So I don't think this can help it can disrupt the profitability or something like that, or supply constraints for the primary. It's
Okay.
not happen in that way.
But for the small mills, there was some impact. Is it so?
At the same time, yeah,
Hmm.
at the same time, that helps primary mills. When small mills are impacting because the margin compression is there due to the iron ore price surge,
Hmm.
iron ore price uh, shock and supply shock,
Hmm.
that that kind of market scenario, primary steel players got the opportunity to take that market.
Okay. Okay. So that's India is, I think, the second largest supplier in the global steel industry after China. And India
Yes.
and China comprises of together more than 60%, maybe around 70% of the entire global supply. Is this data correct?
Mhm. Yes.
Okay. So the larger part of export is going to China from India. Is it correct? Is a correct interpretation?
China earlier dumping their export, dumping their own manufacturing to India as well as the rest of the world.
Okay.
But CY 21, 22, we have seen some compression in terms of export from China,
Okay.
considering their environmental policies and all. Okay,
Mm-hmm. Mm-hmm.
and their internal consumption as well. But if CY 23, the situation differ.
Mm-hmm.
China again start exporting hugely in the world market.
Mm-hmm.
India is also getting hit. Indian steel players also not get the opportunity. Sometimes the landed cost of Chinese steels are lower than the domestic prices. So
Mm-hmm.
lots of end users they
Mm-hmm.
consume from the export market considering the price parity.
Okay.
So
So, mhm.
yeah, yeah, you
So,
can go ahead.
okay, I have one question in this regard. Like as you said, like the Chinese steel which is coming to India are at certain cases though they are cheaper than Indian steels. So do you think the small companies who are focusing Indian market and does
Mhm.
not have tie up like Tata Steel means big players. They are tied
Hmm.
up with many construction companies, many companies in the country. So there are some in terms of the quality. There is no question. The best quality steel they supply. So obviously, whatever Chinese steel are getting dumped, for that these big companies does not have any impact. But the small companies who are focusing may
Yes.
not have contract with certain consumers. So in that case, do you think that dumping impacts these companies? And if it is so,
See,
then why government is not thinking to ban Chinese import of steel rather than focusing iron ore?
I'm telling you, secondary steel players, the customer base they have,
Mhm.
that customer base are not that efficient to import it from China. Very rare. If you
So,
consider the whole portfolio size of the end user for the secondary mill,
mhm,
maybe 20 to 30% are the some big players. Means
mhm.
those are not that big, but still big. 70% are the infrastructure companies, lots of small infrastructure companies.
Okay,
They are not, what I can say, they are not that much insightful. At the same time, they are not that much confident to bring it from China, consume internally.
okay,
That much efficiency they don't have. So the main thing what happens, primary steel players are getting hit just because of this Chinese import.
okay.
That is the primary steel player right now they are getting impacted.
So
At the same
primary steel
time,
players means, are you referring
Tata
like
Steel,
Tata Steel, big
JSW,
players?
JSPL,
Hmm, hmm,
they
hmm,
big players, they are
hmm.
getting impacted because
Okay.
when they are selling steel to any large manufacturing companies or
Hmm.
any large infrastructure
Infrastructure
companies, like,
companies.
yeah,
Hmm.
they can manage it from China. They can consume it from China. There is no such issue where
Okay,
they are getting the hit,
okay,
primary steel player. And the
okay.
primary steel player, if you see export number in CY 21, CY 22, that
Hmm,
Indian export numbers were higher side. 30%, 40% portfolio got exported
hmm,
during
hmm,
that time.
hmm,
But
hmm.
right now, but historical average is 10 to 15% standard average for export. Right
Okay.
now it came down 10%.
But these primary
So
steel companies have the flexibility or capacity also, like to like switch from focusing from domestic to international. Is this interpretation correct?
sorry,
When
can you come again once?
what I mean to say, when Chinese import is impacting the Indian market, you said like primary steel companies are getting impacted, right? So at
Huh.
this point in time, they can simultaneously switch their focus from domestic to international market. They can supply more to international market. So that
Primary steel players.
hmm, big
But the
players.
same thing happened now. See, China is not exporting to India only. They are
Okay,
doing exports to other rest of the country also.
okay,
So
yeah,
where Indian prices are higher price. The
okay.
same thing happened like what is happening in domestic market.
Okay, okay, okay. So, currently, Chinese economy is going through a slowdown, especially in the real estate, construction,
See,
infrastructure
I'm giving
sector.
a uh, view on this part.
Hmm.
If you check the January, February Chinese steel consumption data,
Okay,
it is almost 2 months, 2% lower than the last year. Okay.
okay, okay.
So, and this stimulus, what we are anticipating, and in my last video, I also mentioned that the
Hmm.
stimulus we
Hmm.
are anticipating,
Hmm.
that stimulus is not uh, there till now. Maybe
Okay,
another 3 months is required.
okay, okay.
So, until and unless China start consuming internally,
Hmm.
whatever they produce,
Hmm.
it is very difficult for India to
Okay,
maintain their pricing, to
okay.
elevate their pricing further from the current level.
Got it.
Currently, HRC and river price are hovering around 50,000 to 55,000 range.
Hmm.
HRC is 53,500 and river is 51,000, 51,500.
Okay, yeah.
This price is not going to move from this level in, I think, in next 3 to 4 months at least. Because, and one more thing, Election is right there in the corner. So
Yes.
during the election time, though 4Q is a good quarter for the steel companies historically,
Mm-hmm.
but during election time, infrastructure activities will be stalled. So
Mm-hmm.
on that time, we can't expect that the domestic demand is
Mm-hmm.
too. So next 3 months, there will be a problem for the pricing side, considering the election, considering the China dumping. These two are the major factor which is impacting the pricing currently.
Okay. Yeah. Um, War, every time we have seen post-war, there are rebuilding of the infrastructure. It happens like
Yes.
after destruction, rebuilding is required.
Mhm.
So whether World Bank comes into play, IMF comes into play, whoever comes, but
Mhm.
finally this rebuilding happens. And whenever
Mhm.
infrastructure rebuilding takes place, obviously huge steel requirement is there, like comes into the board. So on this regard, like, do you think like steel prices are going to increase in, if not in the very near future, maybe in the far future, especially
Surely.
when. Mhm.
See, there was a rumor post the Ukraine thing and all. There was a rumor that the rebuilding happened. Just how what you have mentioned.
Okay.
This will happen, but at the same time, when the China is producing huge steel and
Mhm.
they are not consuming internally fully,
Mhm.
it will be a problem for the all over the global steel players.
Okay. So India
Until
will not be
unless,
able to
yeah,
get benefit out of it.
exactly, exactly, exactly.
Okay. 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 Fine. So what are the fuels we must track for steel manufacturing? You said, I think, pet coke, right?
No, cooking coal,
Coking coal. Okay.
and thermal coal to some extent,
Okay.
and mainly cooking coal. Right now, that only silver line in the steel industry is that the cooking coal prices are coming down.
Okay.
It was currently trading at 6 month low of around $270 per ton level.
Okay. Okay. And this
Earlier,
coking
it was
coal,
340 and 350.
I think the source of this coking coal is Australia and Indonesia for Indian
Exactly,
players.
exactly, exactly.
Okay.
And
Okay.
one more important thing that we are observing, just I just want to sharing this for the knowledge purpose.
Mm-hmm.
Currently, in primary steel players are blending that cooking coal as cooking coal dependency is so high to the profitability.
Mm-hmm.
They are maintaining a blended thing. What is this blended thing? They are blending PCI coal, CGR coal with the cooking coal to
Okay.
reduce that the hard HCC premium based cooking coal consumption so that the overall cost of consumption has come down.
Okay. Okay. So
That
what?
I have observed
Okay.
in last 2 to 3 quarters. Everyone is following the same.
Acha, for all Indian companies are doing following the same.
Exactly, exactly, exactly.
Okay. So what kind of margin impact, positive impact, obviously. So
See,
uh,
I'm giving you the mathematics.
mm-hmm.
1.8 million ton of iron ore, 1.6 to 1.8, depending on the smelter and all.
Mm-hmm.
It's required to produce 1 ton of steel, and 0.5 ton of coking coal is required to produce 1 ton of steel.
Mm-hmm.
Now it comes to the coke rate. Tata
Okay.
Steel, JSW, JSPL both have the good quality of machinery. They have the coal gasification plant. Coke rate is low, but in terms of sale, the coke rate is very high. So any kind of meaningful disruption in coking coal price, it's maybe higher side or maybe lower side. The highest delta will come to sale.
Okay.
Okay. If it is go up, sale will impacted badly
Mm-hmm.
among the peers. If it will go down, sale will get the profitability highest in the industry compared to the peers. So these are the mechanisms. Right now, cooking coal price, if it is correcting $50 for a quarter, so $25 का impact तो आ जाएगा,
Acha.
positive impact. But at the same time, I'm saying one more thing, we need to follow the sustainability of the thing because everyone is maintaining 3 months inventory, 2 months inventory.
Okay.
So they have to sustain for at least 2 to 3 months. Then only they can get the benefit, not otherwise possible.
Okay. Got it. Okay. So how do you see this softening of input prices, like coal? Because we have seen in between coal prices went up, shot up quite a lot globally,
Hmm.
right?
Hmm.
Afterwards, coal prices came down. So,
Hmm.
as you said about the sustainability, so what is your opinion? Like, do you see these coal prices are likely to
I think cooking coal price will come down to $50 per ton level, and it will sustain for at least 6 months. Considering that the current mining activities was good, supply is good.
Okay,
These two things will help the cooking coal prices will be lower.
okay. So, this is positive for Indian steel
Yes,
companies.
that is the one and only positive factor currently playing for the Indian steel.
Okay, fine. Okay. Uh, Next question is India is going to double the steel capacity by FY31. That is the target of the government, right?
Yes.
Now, which ancillary sectors are going to be the biggest beneficiary of this move?
Uh, the thing is that campus companies, refractories companies, graphite electrode, because right now whatever capacity 25 to 30 million ton capacity is coming in the board in next year
Mhm.
will come 60% EAF, 40% Lurson, maybe 70-30. Okay.
No,
So
60% you
in
were
that,
saying electric arc furnaces,
exactly,
60%.
yes,
Acha? And 40% is blast furnace. Okay,
Lurson.
okay.
And in EAF, in EAF steel production, you need graphite electrodes.
Mm-hmm.
So in that scenario, graphite India will get the benefit.
Mm-hmm.
And steel consumable side, RHI magnesita. They are the refractory manufacturers.
Mm-hmm.
So these refractory players will get the benefit.
But refractory players will be benefited if blast furnace comes into play. Is it the
Both.
correct for both?
Yes,
Okay.
furnace is the refractory is the thing
Hmm.
which is required, means most important material is required in the steel manufacturing
Now
as a
you
consumable side.
you tell me mathematics if you have the data. Uh, if 30 million ton capacity is going to be added in
Hmm.
coming, you said 30 million ton, right?
25 to 30 million.
25 to 30 million ton.
Hmm.
If 30 million ton capacity is going to be added by FY30 in next 3 years, so what sort
Hmm.
of refractory demand will go up? Is the Indian refractory players have that capacity? Like how, what is their utilization at this point in time? Will they go for greenfield or what would be the picture going forward?
See, there is only three refractory players largely
Hmm,
operating in India.
hmm,
One is IFGS, another is RHI Magnesita,
hmm.
another is Vesuvius. Okay.
Vesuvius. Okay.
RHI Magnesita is currently holding 32% share, market share. IFGL 10 to 15%, and Vesuvius is another 15%. So altogether, it's 65% is India and
Okay.
35% is exported refractory,
Okay.
okay,
Okay.
coming outside from India.
Hmm,
So the thing is that this 30 million ton of steel capacity will take at least 300 kT to 500 kT of refractories. Actually, in refractory space, we can't articulate the volume in that way because there is uh, 60,000 SKUs in refractory.
okay.
So different stages require different kinds of refractory.
Okay.
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 Sometimes it's required bricks, sometimes it's required nozzle, sometimes it's required flow control, sometimes it's required snorkel, sometimes it's required aluminum brick, sometimes it's required magnesium brick. It's a huge product basket.
Okay.
Monolithic, isostatic, lots of products.
Okay.
So we can't say exact volume, but overall,
Hmm,
I'm just giving one mathematics for the growth perspective, which can give you better idea.
hmm.
Historically, refractory industry has grown 1.5x of the steel industry growth.
Okay. Okay. Great. Okay. So we can understand like opportunity is very big. Now my
Yes.
question is, I had a very valid conversation with someone Means one management people in the Tata Steel. Uh, he said like there was some conversion happening, not conversion happening, one feasibility study is happening if like that is in the Kalinganagar plant of Tata Steel, if their blast furnace is converted into electric arc furnace, right? So here's like that feasibility study is going on, like what kind of impact will be there if that conversion happens. Okay. So he explained me, uh, I cannot exactly recollect the data, I have the note for this, but still I can give you the broader view. He says that if this conversion happens, then there obviously cost will go up quite a lot from blast furnace
Yes.
to electric arc furnace.
If on
And
at least
whatever the
1.4x,
eh, um,
40% higher cost.
you may be correct. You are correct, actually. I don't recollect the data, what he said. But the kind of cost would go up that will be compensated by the uh, government's impetus. Government is going to give some impetus for that. And with that,
See,
what would be the margin impact that will come out from the feasibility study? So that was the last discussion I had. So I don't know what is the update. Feasibility study report, I'm not sure whether it has come. Probably I will get to know. So what is your opinion in this?
see, the government intervention of EAF, I don't think so. India, it is possible.
Okay, okay,
That is my personal perception. Yeah, EAF route would definitely give some breather to the coal consumption, coal side.
okay.
Cooking coal to consumption is not required. That is a huge
Benefit.
earning stability side guidance you can give.
Hmm, hmm,
कि
hmm.
cooking coal नहीं चाहिए तो the volatility of earnings is not there
Okay.
because iron ore चाहिए that is there with Tata Steel.
Hmm, hmm, hmm,
They
hmm,
have the captive mines and all.
hmm, hmm, hmm,
So they can easily transform into the steel. Only some cost side escalation is possible. That is that the graphite electrode requirement is there.
hmm, hmm,
Some more refractories is required to electric arc furnace as the heat is a higher side rather than blast furnace.
hmm.
So some cost escalation is there, but that to 1 to 2% not more than.
This is for the greenfield one, right? Means cost escalation is, are you saying
No,
transformation?
brownfield one. I'm just transformation.
Okay,
Transformation.
transformation cost you were saying.
I'm
Okay,
not talking about I'm not talking about the production side cost. I'm not talking about transformation. Transformation cost is 1.4x. I'm talking about
okay,
the production side cost. It
okay,
might go up by 1 or 2%. Or in
okay.
some case, it will go up by 2%, but that 2% will give you the earning sustainability.
Got it. Okay, okay. So again, that means it offers a big opportunity for the electrode market, right? Graphite
Yes.
electrodes. Okay. So
Yes.
what kind of demand addition?
1.7 kilo of graphite electrode is required to 1 ton of cement.
Okay. So you said like out of 30 million tons of steel capacity, how much? 60% is electric arc furnace, right? Means
30
18
million ton,
million tons.
60%, 18 million ton into 1.7 kilo
Okay. So that is the demand per annum. That would
demand
be
part.
the demand per annum, additional demand per
Exactly.
annum.
Exactly,
Now, if
exactly. At
it
the
is,
same time, there is no graphite electrode supply is coming. Only ACG has a put out 20 million ton capacity. But other than
who
ACG,
has
there is
put up,
nothing
sorry,
in the market. ACG limited.
HEG. Okay. No, there is Graphite India is also there.
Yeah, I'm talking about Graphite India and ACG.
Oh,
These
both
two are the
together.
suppliers.
Okay.
Yes, these two are the supplier in Indian
Hmm,
market.
hmm, hmm.
And HEG has come out with a 20 million ton of extra, 20,000 ton of extra capacity.
Okay.
But demand is going up. Supply side, there is no addition here. So we
Okay.
can say that the graphite electrode delta will be there.
Okay. Okay. So the rest is coming from China only. Additional.
China, yes, but China electrode is not in a good quality. Electrode are two kinds of one is ultra high power and another high power.
Okay.
China produce high power and that to high power from the pet coke based needle coke.
Okay.
Okay.
Okay. So what is
So
the source
China,
of, then what is the source of this electrodes? Means from where India imports these electrodes?
India not India not importing at. because they are the internal consumption. Graphite India and ATG
Means
supplies to their
okay, they caters the whatever the Indian
self-sufficient.
demand is there.
Yeah, exactly.
Okay, but going forward, when this demand will surge, so do you think
Yeah, there
that
is lots of other players are also there. No, Graphtech is there, Soadenko is there,
okay,
uh, Tokyo Carbon is there.
okay, the listed players are only these two
Indian market.
in Indian market, and
Yes,
whatever
Graphtech is listed also.
Graphtech is listed also. Okay, okay.
Yes, it's not in Indian market as a
No, I'm
name
saying
of
in India. India, two companies are
India
listed.
only ATC and Graphite.
Graphite India. So whatever additional capacity will come out of these two companies and those additional, you said like those foreign players, like they will be able to cater this additional demand in India.
Exactly.
Okay, okay. And those foreign players means do they have their capacity in India or like do they
No,
export
outside.
outside?
Export.
Okay, okay. So again, when additional demand will be fulfilled by a part of that additional demand will be fulfilled by those foreign players' supply, right? So
Yes.
in the backdrop of indigenization, self-reliant India, Atmanirbhar Bharat.
Hmm.
So do you think more capacities will come, more companies will come in this particular domain? Any picture?
The graphite electrode, the thing is that the raw material, that needle coke,
Hmm.
petroleum-based needle coke, that is the key raw material. The
Hmm.
supply of this raw material is limited.
Sorry?
Production is limited.
For production is limited. Okay.
Limited.
Okay.
Because it's a very high graded raw material.
Okay.
Only Carbon 66, Philip Carbon's one company, they can manufacture this. They are the largest manufacturer globally. So graphite price should go up, boss. There is no other way
Acha.
in the future.
Okay.
Because first of all, if you check the historical last 15-20 साल में कोई graphite electrode का capacity नहीं बढ़ बैठा है other than 80.
Acha.
Secondly, capacity addition is very difficult and very long term process. It will take at least 5 years.
Okay.
Thirdly, cost is very high.
Hmm.
Fourthly, getting raw material is a challenge.
Okay. Okay.
So
So
lots of entry barriers.
what is the source of pet coke for these graphite players? Is there any
Petroleum
Indian source?
based.
No, is there any
No,
Indian?
no.
It's completely import.
No
Means
one.
pet coke is mainly imported.
Ekdom, full.
So who supplies this pet coke? Which country?
Country I currently forgot, but the name of the company is Carbon 66.
Carbon 66. 66. Okay.
Yes.
Okay. Fine. Uh, uh, okay. So the larger part of the upcoming steel facilities, you are saying electric arc furnace, not a blast furnace. Uh, so what is the benefit in terms of electric arc furnace over blast furnace in terms of pollution and carbon footprint?
Pollution carbon footprint, so definitely there is a benefit. That is the main reason. And secondly, I said just mention now, the cooking coal requirement will be not there. So that's the ironing section will be
अच्छा मगर
as iron or coal is internally consumed.
ओके सो पॉल्यूशन तो रहेगा ऐसा नहीं है कि पॉल्यूशन पूरा एलिमिनेट हो
Yeah,
जाएगा
but ESG compliance right now everyone is focusing on. So in that ground they can get some relief.
ओके आई गॉट इट ओके we have seen many Indian steel manufacturers have their own iron ore mine, like you have also mentioned quite a lot. What kind of cost advantage these companies derive for having these own mines? Means a company who is having mine and who does not have captive mine. So what kind of considering the same capacity for
2000,
both of them?
2000 to 2500 rupees
2000 to 2500 rupees per ton
per ton.
is the cost difference,
Benefit.
cost
Yes,
benefit. Okay, that's great.
yes.
Okay, okay. And please explain various outputs, various grades of steel. Like we have seen these days some value-added steel products we are coming across. So what are these different kinds of or different grades of steel?
Steels are mainly broadly track HFC and rebar
Okay,
and CRC. Hot roll coil, cold roll coil, and rebar. These
okay,
are the three kind of thing we follow. And after this thing, the lots of value-added products by changing the converting the metal into different grades as per the railway requirements is different. Hard hardened rail is there.
okay,
That is for the railway purpose, that
okay,
the bullet train tracks and all. So
okay,
it's all are value-added products. So there is different kinds of that facility is huge.
okay, okay. So some like additional like how these specialty steels are manufactured? Is there any additional metals required to blend with
No,
the
no, no.
steel?
It's just because of the value engineering.
Okay, okay, got it. Okay, so for these value-added products, what kind of margin benefit or these companies can manufacturers can derive out of it? As you said,
10,000 to 15,000 rupees per ton as compared to the vanilla price.
oh, okay, okay. Any company do you see in this particular value-added products? Especially you said
Jindal,
bullet train tracks.
yes, Jindal, JSPL is in that.
Jindal means you are saying Jindal Steel and Power
JSPL,
Limited, JSPL. Okay,
yes,
okay, okay. So they are manufacturing those bullet train tracks.
yes.
Okay, okay. But do you see like it is going to have a significant contribution on their top line?
Definitely value-added product is going to increase for 10 to 20%. At the same time, the value-added product will come. Then the dependency of the plain vanilla product price will not there. So that will help the margin sustainability going forward.
But addition, what I'm saying, obviously margin impact will be there in the positive side. What I'm saying, do you see any positive addition in the top line due to this? Any significant addition in percentage term?
Addition, yes, if the portfolio shift from it earlier it is 5%, now it will become 10 to 20%. Then obviously top line contribution will go up as the realization is a higher thing. Na?
Okay, okay, got it. Okay, fine, Pratim. That was it from my side today. Thanks for your participation. At the end, I would request you to have a few words for the investors if you'd like to convey.
See, currently maybe 6 months is not good for the steel manufacturer primarily. But post that, see, again, it will be a political stance if the Modi government again came in play. Mm, see, whoever will come, if Modi government come, I think what will happen, whatever capex they have done, whatever project they have initiated, that will continue. Okay, if any other government comes, then they might take some time to revisit those things, to change the dynamics and all. That can
That may be
take
a
further time.
slowdown. That may be a slowdown.
Yes, 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 yes,
Hmm.
yes. But if the government will be same, then 3 to 4 months only electional stall will be there, not more than that.
Okay.
After that, the cooking coal price is coming down and pricing pressure will China stimulus will come into play.
Hmm.
Then definitely Indian steel players will get the breather in the pricing side as well as the raw material side. Then you can say that the trade will be maintained. So lots of discussion is going on. See now the pricing movement is not possible. Trade might be compressed in the near term. That can degrade the valuation and all. But I think so. The prices of coking coal is coming down. That is the thing that can change the thesis of this margin compression. So 6 months may be a bad period for the bad, not bad, maybe neutral to slightly downside to be available. But after that, the growth story and upcoming capacity and all, definitely steel players will do well.
Thank you so much, Pratim, for all these
Thank you.
data and so many input and important information. So, anyways, thanks for you. Thanks to you, and hope we will get you once again after some time, after a few months,
Okay.
maybe after the next quarter. So, thank you so
Sure.
much.
Thank you.
Take care. Bye bye.
Yeah, bye. Bye.